Well, we are going to chat about two things, and then anything that you might want to chat about, but two very important things. One of them is tomorrow. Tomorrow is a very big day, at least I think it is, because the new inflation rate will be announced tomorrow. Now, that when I say new inflation rate, it's going to be the inflation rate that was determined for the month of November. If you recall, on November 10th, they came out with the October inflation number, and that number came down from the previous month by almost 50 basis points. That's what led to that huge one-day drop in the rates, and the rates have pretty much stayed down. Maybe they went up a little bit last week, but they've stayed down. So should inflation come down tomorrow? Now, I'm going to talk about that a little bit so that you get an idea on where the numbers might be. So first of all, I will predict what happens when the inflation rate comes out. What I will not predict is what the inflation rate will be, because I don't know. Now, I'll give you some hints on that, but I'll give you three things. Should the inflation rate match or beat the analyst expectations, we're going to have a very nice interest rates movement tomorrow, all right? And I'll talk about the analyst expectations in a moment. Should we come down off of last month but not meet the analyst expectations, we're probably going to be pretty flat in the market. Should we not beat the previous month's inflation, you're probably going to see rates go up. So those are the three things that'll happen. Now, we've had 4 or 5 now consecutive months of inflation dropping a little bit by little bit by little bit until last month. It dropped 50 basis points, 0.5%. That was huge. It was huge in two ways. Number one, 0.5% is a big drop. The second thing is that it was about 25 to 30 basis points less than it would drop more than what the analysts were predicting. So the combination of the rate coming down, of the inflation rate dropping as much as it did, and it beating the analyst expectations, that's what caused that single day drop in rates that was the largest in the past decade. So that was huge. Now, let's talk about tomorrow. A couple of things for tomorrow. First of all, last week, what's called the PPI came out. That's the Producer's Price Index. That is the inflation rate on the wholesale side of things. It's the people who are producing the goods and services that you and I, the consumer, buys. That came out last week. The good news is it came out below the previous month. The bad news is it only dropped half of what the analysts were predicting. As a result, there was quite a bit of negative talk about what's going on because that didn't come down as much as they expected. As a result, we actually saw interest rates blip up a little bit because there was talk that maybe tomorrow the CPI number, the inflation number, is not going to be as favorable as people were anticipating. So that happened last week. Again, this is all conjecture. Nobody knows for sure what's going to happen tomorrow, except for the people who are getting ready to publish it. Now, two things. Again, one, is the rate coming down? Is the inflation rate coming down? Number two, is it going to meet the analyst expectations? Let's talk about the analyst expectations. There are many, many of these economic analysts who come out with their estimates. And then what happens is the market actually has what they call a consensus. And what that is that's if we take everybody's numbers and we kind of look at it and say, okay, the consensus, I don't want to say average, but the consensus number is X. Well, tomorrow, they're expecting it to come down. The analyst expectation says 7.3%. I'm shaking my head thinking, they got to be crazy. What are they? I mean, We just had a 50% drop, a 50%, a 0.5% drop, 50 basis point drop last month. What makes them think we're going to drop 40 basis points this month? In the last 5 months, only twice have we gone 40 or more. Most of the time, the drops are going to be about 20 basis points, maybe 25. That's it. So the analysts are saying, well, we should get a 40 basis point drop, just under 0.5%. Well, I was kind of hoping that what the analyst expectations were going to be somewhere around 7.5. If they were going to say 7.5 and we got in at 7.4 versus 7.7 last month, well, that would be outstanding. Not only would we come down, we'd beat analyst expectations, everything would look favorable. But the analysts are being very aggressive for some reason. Not all of them, but the consensus number. So tomorrow, I say all of that to say this. Tomorrow, when that number comes out, if it comes out somewhere around 7.4, it's going to be a very good day in the market for interest rates. If it comes in above 7.4, but below 7.55, it'll probably be a pretty flat day in the market. If it comes in at 7.6 or above, which is still better than the previous month, we actually may see a little bit of an increase in interest rates. We just don't know yet, not till tomorrow. So anyway, all that to say that we're going to have some fun to look at this tomorrow and see what happens. Now, how does that change what you and I do? Doesn't change a thing. Because whether the interest rates are at 7%, 8%, or 6%, people still need to buy homes right now. And you've seen the chart. Some of you have put out video on why people should be buying homes right now. You've taken some of the information that we've shared in here and that I've been sharing about why it's so important to buy a home right now. Some of you may have saw the reel that I put out last week that had the actual chart, the one that Mike actually had Rob put together for you that you could use, and I kind of doctored that up a little bit and then sent it out last week. It's important. This is a great time to buy regardless of what's going to happen tomorrow on the rates. So if I say that, regardless of what happens to the rates, we're still going to do what we do, then why does it matter what happens tomorrow? And what matters is you and I being the trusted advisors. We want to look like we are the trusted, knowing advisors. So we're not predicting the market. What we're saying is we know what the market's doing, we know why it's doing what it's doing, and as a result, you can trust the information we're passing on to you. So much so, our daughter and son-in-law, they moving up to Chattanooga, and they were looking to buy a home, and they got with us a week ago and said, we're just debating, should we really buy right now? Because they sold their home in Buckhead, and should they buy, should they not buy? They just moved up there. I said, guys, if you can buy, absolutely not a better time to buy than right now. You've got to buy right now. And they did. They went under contract last night. So I'm not only saying it to you, I'm saying it to my own family. This is a perfect time to buy. And what's going to happen in a year? We're just going to refinance them. You've been hearing me say this over and over and over again. And again, I'm doing it because you and I want to be viewed as the trusted advisors. Not that we're predicting the market, but we understand enough about the market so that we can provide accurate and factual information to our clients. So tomorrow's a big day. If you want to publish something today, that's what I'd be publishing. Tomorrow's a big day. Not because you know what's going to happen, but because you know that regardless of what happens, you know that if it's this, it's this, if it's this, it's this, if it's this, it's this. You know that. That makes you a trusted advisor. And that's what you want to be able to publish. So before I go into the next category, which is buying power, any questions on tomorrow? All right, good. You all understand it. I love it. I see a whole bunch of videos coming out today on it. All right. We've talked about this before, but I want to make sure we take a moment and go through it because with interest rates fluctuating in the manner that they are, I think it's important to have a kind of a quick response to what's happening with buying power. So I'm going to use an average loan size of $300,000. And the reason I'm picking 300 is that's about the average loan size that I do. Some are 80,000, some are 800,000, but the average is about 300. So let's take a $300,000 loan, not purchase, $300,000 loan. Now, a 1% swing in the interest rates, whether it's from 8 to 7, 7 to 6, 6 to 5, 1% swing in the interest rates will affect the buying power by about how much? Anybody take a stab at it?
12%.
How much?
12%.
Little high, but very close. It's just under 10%. So a 6%, to give you an example, $300,000 loan at 6%, principal and interest is $1,790. If I take a $300,000 loan at 7%, that number jumps to $1,984, just over 10%. Now let's look at this the other way. Let's flip it around. If somebody's trying to buy a home, and they're getting a $300,000 mortgage, and that is the absolute top they can afford because their debt to income ratio says I can't go over 300,000. And me or another loan officer pre-qualifies them, pre-approves them at 300,000. At a 6% interest rate, the rate jumps to 7. Now, if their debt to income ratio was maxed out at 6%, now they can't go to 7. So how high can they go? The approximate number in this example is $270,600. That is almost a 10% drop in buying power. Now again, this is not something that you or even me for that matter have to know right off the top. And what we need to know is that as interest rates drop or go up, the amount that a person can purchase is going to change. If the interest rate goes from 7 down to 6, now they can get a mortgage up to 300 from 270, which is beautiful. You gotta be careful though. They start looking at homes that are, $330,000, putting about 10% down, and all of a sudden interest rates jump from 6 to 7. Now they can't, that starts freaking everybody out. But there's another reason it's important to know this. It's not just their buying power, it's what I call their payment comfort. Because a lot of people that you and I talk to can actually afford more home than they're trying to buy. Do you experience that a little bit? All the time. Okay. So what we're dealing with is not buying power. In that example, we're dealing with payment comfort. So if somebody says they're comfortable with a $2,000 a month payment and the interest rate goes from 6% to 7%, their payment comfort just got shot because now all of a sudden the payment's going up about 10%. Does that make sense? Now, if their payment goes up about 10% and they can't afford it, what would you advise them if they were to ask you, well, should I really do this anyway? It's a 10% increase in what I was comfortable paying. What should I do? If they come to you with that, what's your thought? What's your advice?
See if there's any room for a seller paid buy down.
I'm sorry?
See if there's any room for a seller paid buy down.
Potentially do a buy down? Great idea. What else might you advise them? What else? Anything? All right. Someone asks me that question. One of the first things that I come back with, again, I like asking questions. First thing I come back with is, Do you think interest rates in the next 12 months are going to go up or down? And right now, because of a lot of stuff that's coming out, people are saying, I don't know, or maybe they'll come down. I say, well, I am absolutely convinced they're going to be coming down. Unless we have some kind of a major crisis somewhere, interest rates are going to keep coming down. So your payment comfort is at $2,000. And it's going to be $2,200, just over $2,200 for the next 12 months. But as soon as those rates come down, we're going to get you at your payment comfort. Now, what do you think about the possibility of making that purchase today? And usually what I'll get, and because this is the conversation I have with people all the time, usually what they'll come back with at that point when I say that, when I ask them in that manner, they say, well, if it does come down like that, then I'd be in great shape. I said, well, there's two other things to consider. And they say, what's that? I said, number one, do you think your income is going to stay the same or go up or go down, God forbid, in the next 12 to 18 months? And he said, well, probably it's going to go up a little bit. I said, okay, fine. So now you've got a payment that's 10% over where you want it, but it's probably going to come down because interest rates are coming down. Your income is going to go up during that time. And here's probably the most important thing. Unless you think home prices are going down, which they're not, home values are going to continue to rise, you're going to pick up, on a $330,000 home, you're going to pick up about $16,000 or $17,000 of equity in that house. So when you look at it, you're going to pick up quite a bit of money on equity. Your income is going to go up and your payment is going to go down to what we call your payment comfort. Does that make sense? I mean, these are the conversations that you and I need to be having with people right now. If you go back and look at any of these huddle sessions that we did in 2020 and 2021, we never talked about this. Interest rates were in the 3s and 2s. There was no conversation about this. But now, the market shifted. What have we heard Mike say over and over and over again? Great agents thrive in all markets. And they thrive because they know how to pivot and shift when the time comes. And we have to pivot and shift right now. And with interest rates moving as rapidly as they are, I mean, a month and a half ago, I was quoting and locking people at 7.5%. This past week, I was able to get someone at a 6.5% with no points. That wasn't everybody. It was a unique situation, but the market got better. Now, Thursday and Friday, it got a little bit worse. But I mean, it's a lot different. So with the market shifting as it is, let's get ready. Now, one last shift that the market's going to do. First, before I go on the next shift, any questions on the buying power and payment comfort? Any questions on it? The whole thing with payment comfort right now, by the way, is great video. Because there is not another real estate agent or loan officer talking about payment comfort. So you can make yourself unique in the marketplace with that kind of conversation. But there's one other thing that's coming, and you all know this one already, and that's going to be market demand. Should those interest rates continue to come down, and if you saw I don't know how many of you actually went to the YouTube and actually looked at the chart that I showed on the YouTube, the 3-minute and 50-second video I did on YouTube. It actually showed the chart and showed what's happening. If in fact, the next 5 or 6 months, we continue to see inflation come down, even if it doesn't come down as much as the crazy analysts are predicting it, if it just keeps coming down, the combination of a 10 or 11 month continued movement down on inflation, interest rates are going to continue to make that move down. What's going to happen to all the people sitting on the fence? They're going to jump off the fence. They're going to start buying where you're exactly right. And as soon as they hit the market, what's going to happen? Prices are going to go up. Thank you, Pedram. That's exactly what's going to happen. And all these people sitting on the fence, you know what they're going to do? Shucks, I should have bought before.
gonna say they're gonna wait for prices to come back down.
And then they're going to wait for prices to come back down. I mean, I just have to laugh at all this. You know, they're not coming back down. All right, any questions? All right, big day tomorrow. Have fun.